Good morning, this is Steve O'Hare and welcome to another edition of Talking Bull. Today is Thursday, the 14th of October, and I'm on my own today, but don't worry, I'll still provide a fantastic show for you. Let's dive straight into the news. We can talk about the two more power suppliers in the UK have collapsed under the weight of surging energy prices, bringing the total to go under since the beginning of August to 12. BP-backed Pure Planet and Colorado Energy, which serve a combined 250,000 customers, announced they went out of business on Wednesday. The sector's woes are far from over, with a Glencore-backed gas supply in the UK no longer providing gas to utility clients. Meanwhile, Russian President Vladimir Putin said his country is ready to deliver all the natural gas that Europe needs, as he blamed the continent's energy crunch on flawed policies. Russia has already boosted shipments to Europe by 50% this year through the end of September and stands ready to increase this further. Surging energy prices come as an opportunity for the Russian president, who wants to press the EU to rewrite some of its gas market rules. 8 out of 10 companies in the UK struggled to recruit last month, even as many of them increased wages, a survey showed. The hiring difficulties are more acute in the catering and hospitality sector, where 92% of companies reported difficulties, according to the British Chamber of Commerce. The shortage reflects the combined effect of Brexit and the pandemic, as payrolls are already above pre-pandemic levels after a record surge in September, and job vacancies are at an all-time high. Maybe I should ask for a pay rise, Joe. European stocks are set to follow Asian markets higher, with earnings season helping to highlight economic recoveries despite inflation pressures, including soaring Chinese producer prices. And it's another busy day for earnings today. The Bank of America, Morgan Stanley, Wells Fargo and United Health and Citigroup all giving the latest figures in the US, while TSMC's figures could reverberate as it gives clues regarding the global chip shortage. So that's pretty much where we are on that. Let's take a look at the technicals. I'll start with FX. I was looking at this. There's a video I produced this morning. You can catch it on YouTube, just drilling down to a little bit of detail, but I'll cover it off here now anyway. The double bottom formation in the dollar index has been confirmed, and price action has stalled just in front of the September week swing high, 21st of September week, 94.72 there. We did see a doji candle last week, so a little bit of warning of indecision and negative follow through on the dollar this week. So also looking at the daily chart, great candle here, bearish engulfing candle. So we should see further downside on this dollar. Support coming in at 93.73, so watch out for that. On the 4-hour chart also, we've broken below the Ichimoku cloud. That's negative, and 93.68 comes in as a little bit of support there. Take a look at euro dollar. We've been looking at this head and shoulders formation, which has been confirmed. We also have this, you could call this almost a double top, because the right shoulder was a lot higher, and that's resistance comes in at 117.04. The neckline for the head and shoulders formation is higher at 118.45. We can see that this is this week's price action, which is engulfing last week's negative price action. So it looks like we're on for a retest of either the double top neckline or the head and shoulders formation neckline. So a little bit further on the upside for the euro dollar as we sit. Cable broke below the double top formation neckline, which comes in at 136.70. We're trading above that now, so we got the that confirmed. We also had horizontal support broken for the week of the 27th of September, but price action has pulled back higher. So cable benefiting from this and not being hit quite as hard as the euro against the dollar. Other levels to watch, we can see short-term basis, we've taken out this week's high, which was the 11th of October high, and we're pushing further. Next resistance comes in at 137.50, trading around 136.95 currently on there. Now, the dollar yen is a little bit of a different story, because obviously dollar weakness, this bad boy should be moving a bit lower. However, we've price action, although it's we've had a bearish engulfing yesterday, it looks like the yen weakness is a little bit more of an issue than the dollar weakness at the moment. You can see dollar strengthening against yen, and looking to target 114.36 on the upside. That's only a point away, 100 ticks, and yeah, looking very positive on that side of things. We've got this double bottom formation, which has been confirmed and taken out, and also you could say that this downward trend line has obviously failed to cap the price action, and we've been sitting above there since March. So after the retest, we've never really looked back. Looking at 112.40 as now a support after the resistance has been broken. Next resistance, as I say, 114.37. A little bit of a way to go to there, but potential to reach that this week. Aussie dollar hasn't quite formed the head and shoulders formation that it looks like it is forming. We need a break of the neckline. We haven't got it yet. The neckline currently today comes in around about 71.35. We're trading at 74 and looking quite nice indeed. On the 4-hour chart, the shorter term, we're pushing away nicely from the support, expecting some sort of correction at some point, but not at the moment. Support coming in from a horizontal perspective at 73.23. Let's take a look at cryptos now. Cryptos, Bitcoin continues this really nice bullish move higher. We've seen price action reach 58,550 this week, just pulled back a little bit from there. However, think about these candles that we're forming on the daily chart, hanging man candles. They are topping candles, so there is a potential for a reversal. Be aware of that. Momentum is stalling. We're near overbought conditions, but not quite in that territory yet, just sitting below the 70 level. The 4-hour chart remains positive. We've got this bearish divergence going on. We can see momentum stalling as price action kicks higher. So I'm still positive on Bitcoin. However, wouldn't be surprised to see some sort of pullback. Really needs to test or really break below the 54,000 level for me to be slightly concerned, although we will still have support from 53,000 downwards to 51,000. So good support below. Obviously, we're targeting the all-time highs at the moment, coming in around about 65,000. On the Ethereum side of things, we are toying with this double top potential. The previous resistance coming in at 3,677. We have moved higher into this, looking really nice indeed. So challenging the resistance as we speak. So it feels like even the coins that sit and follow, hang on to the Bitcoin coattails, are potentially looking quite smart at the moment. The Ichimoku cloud on the 4-hour chart is helping Ripple, although this candle is potentially negative. This is a bearish outside candle which is forming, and that forms at 9 o'clock today. Well, just now as we speak, it's just formed. So that's negative on Ripple. We could see a correction lower. Cardano still struggling around this 215 to 217 level. Well, we'll stretch that 215 to 220 level. Price action needs to really get above there and challenge the 235 to 245, which is more solid resistance. But so the Cardano really not looking fantastic at the moment. 207 support, 202, below that 191. Moving on to commodities. Oil, the WTI crude oil is above $80, still looking positive, nothing really slowing it down. We're in this bullish channel higher. This is the 4-hour chart, and it's broken out of trendline resistance, or broken above trendline resistance. We can see here had a really nice resistance line here, 3 points on the 4-hour chart, broken above it, so potential for further upside in oil today. WTI crude oil has a similar sort of price action on the short-term chart. The resistance we're targeting at the moment is the swing high at 84.19, only about 50 or 60 points away. Obviously, we still, on the weekly chart, we still haven't quite taken out the resistance at 86.62. Still think that's on the cards in this 5th and final wave of this impulsive move higher from the $10 level. Gold, though, gold has performed rather smartly. especially over the last 24 hours. We can see, let's take a look at the daily chart here. We can see the price action yesterday broke above the resistance, the short-term resistance coming in at 1770. We had a warning of that, obviously, over non-farm payroll when we reached 1780, and price action has continued to move higher. We're above the daily Ichimoku cloud. Really, really positive for gold. So 1790 to 1800. Well, 1810 is the band of resistance we're facing at the moment, but we've got some nice momentum going into it. The real target for me is 1834. That is the level that the bulls will be looking to take out on the march higher. Again, if we reflect back to our weekly chart, I still believe we're in a bullish flag formation, looking for higher prices around about the $2,500 level, but that will take a while to play out. So that's it from the precious metals. Let's move into indices now. And just while the dogs bark, let me take a look at, oh, they haven't barked. They haven't heard the postman. Great. Let's take a look at the daily chart on FTSE. Obviously, this has been supported by the dollar strength. We have broken above the resistance level again over the last 24 hours, looking really positive and looking to kick on. Resistance comes in at 72 to 72.35. I think the price or the move will be capped by them resistance levels. On the FTSE side of things, it seems to be one of those markets at the moment that is just sideways. However, DAX has projected higher, again, looking for further upside on here. We've got this trend line, which we had drawn in, potential trend line, although it isn't very clean. So really looking to take out, or the next resistance comes in the form of price action this morning, or the high this morning, 15,359. A break above there, we should see further upside. Taking a look at the Dow, still under pressure, although we're forming this morning doji star formation, or morning star formation, which is in the within the trend. So it's not quite as powerful as if it was at the bottom of the trend, or the opposite type of formation is an evening star formation at the top of the trend. So we are into trend. So it's not clear, not clean, but it still sometimes has the same effect. We're really looking at resistance coming in at the Ichimoku cloud and this downward trending resistance line, 34,700. That looks like an obvious target today. It does feel like the indices are going to continue higher today. So that's, I'll be looking at maybe gun to head for that. Well, it looks like we're in a typical ABC for, correction for NASDAQ. Resistance coming in for me at 15,090 to 15,100. Very positive after yesterday's, well, the previous day's inverted hammer, which is a positive candle, although it's red. Yesterday's bullish engulfing candle has confirmed a correction, and we can see momentum picking up as we correct away from the oversold levels. Definitely more on the upside here. 15,000 would be initial resistance, 15,100 the potential target. S&P reversing back to the 44,000 psychological level. Also, we got this really heavy resistance from the Ichimoku cloud. This is a solid line of resistance to watch. Challenging it at the moment, and plenty more to come. Potential for the trend line also to come in along with the horizontal line of resistance coming in at 44.30. So they're potential targets today. Quickly, we've got Aussie 200 correcting higher. That is helped by the commodity markets, obviously. China 50 has broken above the Ichimoku cloud, very positive indeed. And although we're correcting lower overnight, expecting dips to be bought there. Hang Seng, yesterday's shooting star or doji candle that was formed maybe warns us that there may be potential for a slowdown in this corrective move higher. However, we have formed a double bottom formation, and that targets a measured move a little bit higher than this, maybe up to the 25,700 area. Nikkei correcting and looking really nice indeed. We've taken out that that bearish daily candle from the 12th, from Tuesday, Wednesday was a bit indecisive but positive, and we're now going to be challenging the high from Monday, coming in at 28,770, as long with the cloud resistance. That's pretty much it on that side of things. Let's take a look at Gunter Head yesterday. Poor results from me and Joe. I got stopped in China 50. Joe got stopped out on sterling New Zealand dollar. So for me, what am I going to look at today? After summarizing that, all the markets rather rapidly, I really feel that there's a little bit more on the upside in gold, more on the upside in oil, although I think that will be slower. But maybe I should be looking a little bit more at the indices side of things. Yeah, why not? DAX, I always like. There's always that sort of additional volatility in DAX. And I think based on the overall analysis, I've got a gun to my head, got to make a decision really quickly. I can put a stop in here at 15,000, 15,299, getting long at 15,349. So that's a nice round 50 tick stop, and looking to target a move higher. Looking at 2.5 to 1 inside the ATR band. That's my trade of the day today. Getting long at 15,349, targeting 15,474, stop at 15,299. So what else have we got on the upcoming markets? We've got the economic calendar looking at US initial jobless claims to fall to 315,000. The markets to watch obviously are US dollar related. And the US EIA crude oil inventories out of 4 p.m. stockpiles rose to 3.2 million barrels in the previous week. Markets watch are Brent and WTI. Apart from that and the obvious earnings that we're expecting out from the banks, that should be it for today. So I hope you've enjoyed it, and look forward to catching you again tomorrow.